I think it's 10 o'clock, so I can probably start. So I will. I've got gold up at the moment, actually. So should we just start with gold? Um, there's the weekly chart. So you can see we're in a downtrend, and you can see we've been in a downtrend for a long time. I don't think I need to tell you that. Sure, you're well aware. So right now, there's no reason to look for any change in that trend. I don't think. Since the summer, we've just been heading low. We managed a nice little bounce back beginning of December. Maybe a bit of a safe haven situation with stock markets plunging, but that's been reversed. So where did we get to? 12.39, and then we're back down again. Doesn't look good to me. We needed to have a bit of a recovery. We got quite oversold, so that was always, in my opinion, going to be a bounce and a bear trend to unwind the oversold situation. We did that quite nicely. You can see beginning in November we got quite oversold in stochastics anyway. We got quite volatile. I'm still not sure what all this was about on the 1st of December, that crazy run. But oh yes, I think I had a webinar around then actually, or a couple of days afterwards. I had something where I was on some show somewhere. Anyway, I was saying that for some reason I just didn't. That normally is an enormously bullish candle, and you would be really looking for a continuation of that. But for some reason I just felt that wasn't going to happen. We did get a little bit higher, to be fair, but the 100-day moving average put a stop to all of that, and the market's just headed lower ever since. Yeah, I just don't see any reason why this won't continue lower. We're getting a little bit oversold now on the daily chart, so maybe the downside will be a little bit more limited. Yesterday's candle certainly not very positive at all. That 1203, if you get my gold reports, you'll know that 1202, 1203 area was quite a big one for me this week. We were selling into shorts there with a stop above 1206, so that trade worked quite nicely over the last over Friday and Monday. Just managed to get into some shorts there. We would have run that about half of that at least candle yesterday. But anyway, yeah, nothing telling me to buy into gold at the moment, as far as I can see. I guess it's just a question now of whether we continue down to these lows here, 1163, 1142, and then these lows back down here in November, 1146. So that would be the most likely scenario. I think we get above 1203, 1204, which is my resistance, my first decent resistance level. Then yeah, we're going to push a little bit higher. But again, I think any rally is a selling opportunity. Most of these markets are really in quite strong trends, and I'm desperately looking for any reason for them to reverse, but I can't see anything at the moment. The euro, where are we now? Okay, so the euro weekly chart, also very negative, has been since May, when we topped out here on those Draghi comments. And if anything, just looking more negative, really. Obviously, last week's candle here, not very positive at all. We managed to get as high as 125.69 and then plunged. We closed below the previous week's low, in fact. So that doesn't look too good. There's just one silver lining to this cloud, which I'll show you now. There is a real big trend line, and I've had this in my report this morning. That goes back 4 years. Actually, what am I doing? Monthly chart. That would make more sense. Hang on, what's going on here? There you go, there's a monthly chart. Okay, so I've got a trend line going back to 2005, December 2005 on this chart. Joins up with this low here well, it's the low for 2010, in fact, and it also ties in quite nicely with this low here for 2012. So you can see big trend line, very important, and we're just testing that now around the low 122 area. 122.20 I had as the precise price point. I don't know where we've been to. Actually, I haven't had a look today. 122.14. Okay, so we're within 5 pips of that very important trend line. And actually, we've got a bit of 200-month moving average action going on here as well. You can see that there. It's the red line. It's pretty much hidden behind the trend line. But that is really, really very important support. So although the trend is negative, apart from those trend lines, I can't really see any other reason to get positive about euro, but we are very oversold. So it wouldn't surprise me to see the 122 area hold and maybe get a short-term recovery until I see something far more conclusive than just, well, the 200-month moving average and the 4-year trend line is pretty strong. So to be fair, in an oversold market, it's probably a little bit too risky to be running any big shorts any further. You could get quite a good bounce back from there. I just need to make you aware of that. What you do with that trend line is up to you, but it is, when you couple that trend line with 200-month moving average support, obviously that is something you've really got to pay attention to. At this stage, if we bounce off there, it's still only a bounce in a bear trend until I get some more confirmation from some sort of pattern or something else that's more positive. Because at the moment, that wouldn't be enough just for us to bounce off there for me to say, right, that's it, bull trend started. I need a lot more confirmation than that. But certainly the support level could trigger some short covering, to say the least. That's worth paying attention to. You can see this trend line here didn't really have much effect at all. Probably not even worth me keeping it on the chart. We trickled along it and then broke through it, but that's the next big one. There is another big trend line below that, which I'll discuss maybe in the next webinar, but I won't bother to talk about that one now. So that's the euro, yeah, which is relatively interesting because we are hitting that big support level. We've been oversold for a heck of a long time though. Look at this weekly chart. I mean, we've been oversold for since June on the weekly chart. We're getting oversold now on the monthly chart, daily chart. Yeah, getting oversold on the daily chart too. These are just a slow stochastic, so not worth looking for bottoms where just because the market gets oversold in a bear trend, but still worth noting, especially as we're approaching such a strong support level. Onto cable. There's the daily chart. Well, not much to say. December's gone pretty much sideways. In fact, we've been going sideways since really much the third week of November, but the trend is still negative. I think it's a case of sideways action to try and relieve some of these oversold conditions and then go lower again. There's nothing in this pattern here that's telling me that we should be getting particularly positive, I don't think, on the weekly chart anyway. That candle wasn't too bad. The spike lower to 155.39 and then a much higher close than the week before, but there's been no follow through. So I think really all that signals is the case of we've got oversold and it's time for a consolidation phase before the next leg lower. I'm not seeing anything else that tells me to get positive about this. Not yet anyway. Daily chart. Well, we did manage to relieve the oversold conditions and we're just wanging around now. We're range trading. So, it's really just a case of trading that range and waiting for the breakout. What else can you say? You can see that the range is very clear. Chuck a couple of trend lines on your chart just for clarification. And away you go. Trade the ranges and then see what happens. Really, there's not much else you can do. That's quite a nice little channel. You can get in around the bottom, get out around the top. You're doing all right in that, aren't you? Obviously, the last 3 days pretty quiet, but that's going to be the case when Christmas is only around the corner. Aussie dollar is another one of the markets that I cover on a daily basis for my subscribers, so I'll show you that one. It's not dissimilar to the cable chart actually. We've been heading lower. We started heading lower a little bit later than cable. Only September when we started heading lower in this one, but it's pretty steep bear trend nonetheless. Weekly chart looks negative. I'm not seeing any particular important levels of support really. So again, not very positive. It is just a case of strong dollar all across the board really. You can't argue with the dollar at the moment. Yeah, oversold at Aussie dollar, but that doesn't really matter. Even today, I've not looked at these charts since much earlier this morning, in fact. In the middle of the night when I do my reports. So we've been down to 88.86. You should find that is in fact something that's relatively important. Anyway, let me show you. That rings a bell, that level. Where is it now? Here we go. The lows of 2010. 80.65, 80.86. That was one of the levels I had in my report this morning. 80.86 is the exact low. So interestingly enough, we're testing these 2010 lows, 80.86, 80.65. They're the ones to look for. We're hitting those now. We've had a nice bounce off, so that's quite good actually. I wonder. Yeah, yearly lows are obviously very important. So let's just have a quick look here. You just have a quick look at the daily chart. Yeah, we're gonna have to do more than that for a little positive signal, but the spike lower, and we're up pretty much where we opened. Sorry, you probably can't see that chart very clearly. Let me open it up for you. There's always a chance that we could get something positive out of this candle today. I think I'd like to really see it close above 81.75. We'd have to rally another 50 pips for that. Anyway, early days. Just bear in mind that we're testing those 2010 lows, and we've managed to bounce off that monthly low that I just showed you on that in 2010 off that chart. So yeah, I mean that support level was doing its job nicely, isn't it? If you had bought it down there, you'd be 60 ticks better off, 60 pips better off right now. And that was one of the big ones I had in my report this morning. So that's all I can say on the Aussie dollar. Hitting some decent support there as well as we are in the euro, but not enough for me to turn bullish. Definitely not. Dollar yen, very strong. Obviously, we held some really good support down here last week. Had a good rally off, and this week a little bit quieter for obvious reasons. Let's have a look at the daily chart. So yeah, it looks good really. I can't really see any reason to be selling into this at the moment. We get through this sort of area, yeah, around the 119, well, the 120 area really. We can get, if we get through 120, oh, we're already through it. We're already breaking above 120. So yeah, that looks positive. I'm not seeing anything negative on this chart. I don't know whether you are, but it looks pretty good to me. So I think you just stick with these trends. Certainly with this one and with cable, question is whether the euro and Aussie dollar may have a little bounce against the US dollar. It's possible, obviously, as I've told you, but look at this. Just looks good. Nice correction. That's all healthy. And we rallied back up. So in my mind, we get through 120. I don't think it'd be too hard for us to retest the December highs up there. 121.84 eventually, maybe into next year. Crude's worth a look at. That's another one that I do. This one's negative as well, has been for a long time. It's been all over the press. I'm sure you're well aware of what's been going on in oil. Oops. What have I done there? I'll show you the weekly chart. Obviously, pretty scary stuff. If you're not a dollar, if you're not an oil bear, really in trouble. Where do we get? June, we were up at 107.50, so we've more than halved. We've got down as far as 53.60. I think that's more than half, or close. It's around 50% off anyway. It's one heck of a dump in the matter of 1, 2, 3, 4, 5 months, 6 months. Not too bad a candle here on the weekly chart. More a case of indecision than outright positive bullishness. So again, any rally I think is just a selling opportunity at the moment. I had thought we could bottom out here. In fact, when I saw these two candles, I thought, you know, okay, we could stage a recovery, but we've really just got nowhere. And if anything, this just looks like a continuation pattern to me now. The longer we go sideways, the less confident I feel that oil can recover. And I really do think that the next move is just going to be a break lower. Just a little triangle pattern there, and I think that's a continuation. I don't think that's anything positive there at all. Now we've just gone far too long. We could continue sideways, and I think eventually we break lower. Even if we do break higher, it's just going to offer a selling opportunity. I'd be looking to sell into resistance levels there, but my feeling is that I wouldn't really want to be long oil at the moment. I'll show you Brent crude just to see if that backs it up. And it does. I mean, it pretty much looks the same as WTI. I'm not even going to bother to show you the weekly chart. Not really worth it because it's just negative. There you go. It's pretty similar, isn't it? I don't see that as anything positive. I mean, the stochastic's trying to recover. I think we could go sideways a little bit longer. Let this recover off oversold situation and go lower. I'll have a look at back to WTI to answer your question about where we could go. Yeah, $40. I've seen that all over the papers. It does make me wonder. I mean, you know, when oil was above 120, everyone was bullish. Oh, it's, you know, peak oil and all this rubbish. You know, we're all going to be in trouble. Oil's going to run out. Everyone gets so bullish around the top, and everyone gets so bearish at the bottom. No one was saying sell oil when it was breaking below these 100 and 200 week moving averages. And, you know, I mean, I've kept all our clients short. You just got to stick with the trend. It's so basic. It's so obvious. And we broke, so we hit certain support levels, and I would say, well, you know what, this is a good support level. Maybe we should try a long 100 pip stop, and if it doesn't work, you jump into your shorts again and just run them. It's very simple, but it's funny how people don't get mega bearish until we've already had an absolute collapse in the price, and people don't get mega bullish until we're right near the peak. So with all these people suddenly talking oil down, when it's already dropped 50%, and saying $40, well, you know what? I've got my eyes peeled for something more positive now, because I love it when the press get really negative about a market. You do have to think to yourself, hang on a sec. I'm going to have to look at a monthly chart and try and get some idea of where we could go. Fibonacci's not going to do much for me here, I don't think. No, not really. We've got some fib support around the $51 mark. That looks like a reasonable target, 51, 50 and a half. Maybe that could hold it. We could get a decent bounce back from there, I suppose. What have we got? 2007 lows at 49.90 as well. So yeah, that 51 51 to 49 area looks like the next, 51 to 50 looks like a decent support area. That looks also like a decent target, actually. I'd see if we can hit that and maybe bounce off there. But you can pick as many targets as you want. 47.60, that looks like a good mid 2005 low. Then you've got 2005 lows around the $41 area. So again, that would be a decent target. I'd say those three are decent targets just from a quick look without going into any detailed analysis. And I'm not going to bother drawing trend lines and everything else, try and find a target. But I'd keep your eyes peeled for some sudden reversal when everyone starts getting negative about oil. We shall see. I'll be keeping my eyes peeled, that's for sure. Nat gas looks pretty horrible. I don't know if you want me to go over that. I won't bother unless I get a special request for it. I'll do some stock market stuff now. We've got 20 minutes or so left. Okay, so I won't bother with the weekly chart. Well, I'll just show you quickly. With the weekly chart, is obviously very positive. We've just gone up and up and up. So, hey, guess what? We're in a bull trend. And these levels work really well on the downside when we had that little correction. Gave us a good chance to get into longs. It actually surprised me a little bit. I thought we'd probably hold a little bit higher than we did. I thought we'd bottom out around the 1980 level. We got down as, I think, was it 1980? I just remember this overrunning by about 5 points or more. Oh yes, I think, yeah, it was 1980. I thought we were going to bottom out there. And we got as far as 1968. So to be fair, that caught me out a little bit. You'd have had to have had a 15-point stop to have lived through that one, but we eventually did get back above that 100-day moving average, which I initially thought would hold, but we just closed below it for one night and then got back through it. But now the big question is this potential double top. So we've had a rollover. We're into March now, and we've got a high of 2079.75 all-time high. Matches pretty closely to the 2079 high we had back at the beginning of the month. Big question is that a double top pattern that's going to trigger something a bit more serious to the downside through the beginning of next year? It's entirely possible. It probably is worth trying a little short here, maybe with a stop above, say, 2090 or something. Obviously, we get through 2100, that's going to look pretty positive again, and the bull trend will be restarted with the next leg higher. But you never know. This little double top pattern could do something, and we could see at least another bit of profit taking, perhaps even retest the 100-day moving average in that 1990 area, and then we'd have to see what happened at December lows at 1968. So just be aware of that potential negative setup. Although it's not backed up very well by any of the other markets, to be fair. I mean, NASDAQ, I'll show you. That looks fairly positive to me. Weekly chart looks good. So if another market had, formed a double top and we were starting to head lower from there, I might lend a bit more weight to that E-mini S&P potential double top. but I don't really see anything else particularly negative. You often get little double tops in a bull market that hold for a little while and then break higher and then hits a load of stops and we race higher. So I've got a feeling that's probably the most likely scenario in the S&P at the moment. But at least I should do. At least I should do is make you aware of it. The E-mini Dow Jones. That's the March contract. No, that's the rollover. That's the continuation chart. Okay, so again, possible double top here for the E-mini Dow. We haven't actually managed to retest the previous or the all-time high on the continuation chart anyway, which is 17,980. We've got as far as 17,928. So we'll see what happens there. But I suppose the key point is some of these American markets are at least getting close to testing their all-time highs if they haven't already done so. European markets have been lagging behind US for quite a while now. Euro stocks. I'm guessing no one really cares about Euro stocks, so let's go straight to the DAX. There you go. Doesn't look to me as positive as the American markets do. I know it looks a bit like the Nasdaq chart, if anything, but there's a trend line. You can see we're approaching that trend line resistance, so that would be up around the 10,000 area, just above 10,000. That's going to be 10,000 is always a psychological one, and we've got trend line resistance there as well. Now we had a previous all-time high there at 10,000, so let's see if we can get up to there at least. Obviously, we'd have to then get through 10,127, break the all-time high if we're going to continue higher. But I've got a feeling, Europe just doesn't look as good as America, as the US market. So we'll see what happens there. FTSE has got a mind of its own. Doesn't seem to follow anything. There you go. Can't make much of that. But we're approaching the 100-day moving average at 6,600. That seems to be just holding us back over the last couple of sessions. If we get through there, we've got 200-day moving average at 6,650. So this area is going to be a big old resistance. That 50-50 tick area should be quite strong resistance. We're not overbought yet, but we've had a good bounce in what might be a developing bear trend, really. Not really sure. I was quite surprised at the strength of this recovery, but we were held by that big trend line. Where did that come from? I'm not sure why I've drawn that. Anyway, volatile to say the least. Okay, I don't really have much else to say, to be honest. It's just a case of dollar strength is affecting oil, it's affecting gold, it's positive against all the crosses. Stock markets, until they show us something a bit more negative, I guess we've got to stick with the bull trend at the moment, although Europe looks a bit weaker than America, so I'd be more careful about being long that one. With America, obviously, you just got to break through those all-time highs for it to be positive. It might be worth a little short here, just to see if we do get a small double top pattern. If you've got any requests, I'll happily have a look at that. Otherwise, I really don't have much else to say. Markets are dead, so I can't really comment on any of the moves today. It's Christmas Eve tomorrow. Thanks very much for joining me. The next one's in January, so I hope you can join me then. Cheers.